Heck of a year for, broadly speaking, for technology stocks, in particular the FANG names that we focus so much on. Of course, many of them are amongst, if not the largest market cap companies in the country, in the world. What do you think is going to happen next year?
I mean, for FANG, Facebook remains probably cheap and deservedly so. They're never going to escape regulatory scrutiny. Amazon has been the promise of, exploding earnings. And they did it for a couple of years, and then they backed off and decided to go back into investment. I actually think they turn it around next year and start delivering earnings. Netflix, I'm hugely bearish on, and that's actually a huge theme next year. Competition for both subscribers and content, I think it's going to destroy them. And I think content more than subscribers. I think they'll continue to grow, but I think you're going to see, turn Netflix on and nothing's going to be on. And Alphabet, is kind of a mess. They spend a lot of money on things that don't make any sense. They're opaque. We don't actually know how they make money. They don't tell you what YouTube revenues are, for example. So that one probably moves sideways. So of the FANGs, I really like Facebook, but they've got structural problems with regulators. Amazon's the best in class, Netflix the worst in class, and Google kind of in between.
All right, I want to dig more into Netflix in just a moment, but first, Mark, I want to get your thoughts on where you think the greatest outperformance could be, the stocks that are poised to have the most potential upside going into 2020 right now.
Sure thing, Morgan. I would say Snapchat, number one, for us is a great stock to own into 2020. They've really had a complete reorg of their sales team. They've also had a reorg of just how they branded the product, bringing in Jeremy Gorman from Amazon, who I think has really brought them in better favor with agencies and advertisers. We're hearing and seeing a lot of new advertisers coming to the platform. I'd say, generally speaking, agencies and advertisers alike are looking for a fourth sort of horseman to balance off their dependencies on, Amazon, Facebook, and Google. And I think Snapchat has a really core demo in that sort of Gen Z, early millennial, that they're making very easy for advertisers to monetize today. So Snapchat would be number one. In terms of number two would be Facebook. I do agree with Mike that there will be continued regulatory scrutiny here, but unless there's a breakup in the picture here for Facebook, it's the best ads platform out there in terms of returns. It's got the best reach, and I think if you think about utility to users, the utility to users is of high value. So I think it's going to be very hard for the FTC to really advise on a breakup of this company. So those are the top two for us next year.
All right, Michael, I want to go back to Netflix for a minute. I get that you're hugely bearish, and certainly we're seeing some of these competition concerns start to manifest in the stock and in the numbers. You've been bearish for quite a while, though. I think underperform rating since 2011. Do you feel like you've missed out on any of the run we've seen up until now?
I'm a broken millennium clock, so I'll be right once every 1,000 years, but I'm going to be right on this one. Sure, I've been completely wrong about what investors are going to value, and Netflix has grown a lot faster than I thought. I continue to think their 200-country strategy is just asinine. Amazon is in something like 16 or 20 countries, and Netflix is in, Gabon. What the hell are they doing in Gabon? So I really think that they're never going to be profitable internationally. But I think the big issue, and I called this with my downgrade in 2012, I said Disney is going to get fed up letting Netflix profit off of Disney content, and they're going to pull their content. And it took them 7 years to figure that out. I actually thought Bob Iger read my research, and apparently not. So I was early by 7 years. I'm going to be right. Content's going to evaporate, and I think Netflix is going to get cut in half.
Oh, man. All right. 7 years early. Better late than never, maybe. Mark, let me go to you on Facebook and just push back a bit. It's going to be an election year. There is no doubt Facebook is going to be under the microscope again. It is not hard to imagine it's going to figure prominently in the election itself. You could imagine a scenario which, the pressure that we saw on the company this year in terms of public opinion, or more so from regulators and politicians, will only grow next year. But you don't see that sort of knocking them off their stride.
I don't. I think, we've gotten a little bit of already, I guess, some leaked dialogue from the FTC that's really indicating This is from the chairman himself. I think it was an FT.com interview where he indicated it's really hard for us to sort of, look at breaking this company up since we've already approved, mergers here. So they obviously approved the merger of Instagram. They approved the merger of WhatsApp. And as he has indicated, it's tough for them to argue sort of unwinding that unless you can prove that Instagram would have been as successful as it is today, without Facebook. And I think that's a hard case to prove. In terms of other regulatory scrutiny, you obviously have the DOJ that's working alongside the FTC. You have the House Judiciary Committee. You've got district attorneys in New York, as well as I believe it's 8 or 9 other states. So obviously there's a lot of weight on the stock from a regulatory standpoint. But again, I always point to if the breakup isn't in the picture here, I really don't see the stock really being impacted, and I even can make a case from a breakup standpoint that there is downside protection here if you give sort of Instagram a higher multiple. The other point, David, I would just make to your point is I think Facebook is generally playing ball right now with the Trump administration. I think there is some value that they're seeing in terms of Libra. Much longer term in terms of stability in the U.S. dollar. I think that's something that's not really talked about today. But not only that, but as a sort of offset to China's intentions of building its own digital currency. So I think there's some things within the existing administration that may come out in their favor.
Mark Tepper, I want to get your thoughts, especially since some of your holdings include Alphabet, Facebook, Amazon, Disney.
All the big ones, right?
Yeah.
So we own Microsoft, we own Apple, but those are two where we're actually taking profits right now. So we've seen, quite a run this year. Apple in particular, and the forward multiple's gone from 11 at the beginning of the year all the way up to like 21.5. So it's essentially doubled. 5-year average forward multiple's 14. So that thing's really at the high end of its valuation range. Next year is going to be an execution year. They're going to have to execute. Our favorite tech name right now, Salesforce, CRM, software play, all recurring revenue, making unbelievable acquisitions. They're going to help to really build out their customer 360 effort. So that's what we like heading into 2020.